All right, Gary Rappaport. Gary, you are on the front lines of coronavirus. 12 million square feet of commercial real estate properties. You've got $3 billion assets under management, 110 employees, 1,750 retailers and investors, mortgages. You're the whole picture. How are you running your company right now, Gary?
Well, we're running it remotely, that's for sure. We have a skeleton crew, about 5 of us that have been working in the office. But we're working, and we're working well, and we've let none of our employees go because we have to protect the real estate, and this is a time when we need to protect our employees as well. But of the 5 of us in the office, we're opening mail, we're paying bills, we're collecting rent checks, but more importantly, we're taking care of the physical plant. You know, with all the stores closed, we have a lot of we have to worry about security. We have to still take care of the properties. We still have operating stores there. We have grocery stores. We have pharmacies. We have gas stations. But we also have of course, a lot of stores that are closed as well. But we're operating and we're doing well. Everybody has a laptop, and we're using the technologies of today, and we've become actually better at it by having to run through this type of time in this crisis.
What are some of the hardest challenges that you've been facing as from a business operations perspective?
Well, you know, I think it's keeping on top of what's actually happening out there. You know, which tenants are closed, which tenants have asked for rent relief, which tenants today's April 1st are not going to pay the rent for the month of April. We've designed reports, and we've redesigned reports, and we've redesigned reports because we're sitting there and we're trying to figure out continually on a day-to-day basis how many of our tenants are closed in our shopping centers, how many of the tenants have asked for rent relief, and then how are we responding back to that, and how many tenants are not going to pay rent. And we're doing that on a tenant-by-tenant basis, shopping center by shopping center, and how many dollars actually we would expect to collect per shopping center if everybody paid their rent, and actually how much do we expect we're going to collect, especially as we get up to next Friday, let's call it Friday, April 10th. And the issue with us, which is a little bit different than other companies, is because of the 60 properties we take care of, 30 of them are properties I have an ownership interest in. Okay, and of those, some of my partners are institutional partners, and they have a right to decide on where we're going and what we're doing. And the same thing on the other 30 properties that we don't have an interest in. We probably have 15 different ownership groups, institutions, individuals. Some of the families have 2 and 3 and 4 different people that have opinions, and we're trying to both inform people of what's going on, doing the job, and making sure that everybody has the right to give us their thoughts, and then to sometimes have to run those properties slightly different. But from the standpoint of operating a company every day, this time is going to make us actually more efficient and more technologically savvy than we were before.
We're going to get in a little, we're going to dig into how you're interacting with your tenants and how you're handling those requests for rent relief, what goes into that. We're also going to dig into how you're interacting with the properties that you own and manage. But you mentioned technology. Any specific technologies that you've been relying on now or you found helpful in this new remote paradigm?
You know, you mentioned Nexus from the standpoint of the accounting system. And while we've been using that for a long time, we've actually are using it on a much deeper level now. I mean, we did not force our vendors to submit their invoices through Nexus. They could send it in by mail, and then we would scan it, put it into Nexus. What Nexus does is it allows a vendor, as an example, let's say you're a cleaning contractor. You can put your, you can send in your monthly bill. If you send it in by mail, we would scan it, we'd put it into Nexus. The property manager could confirm that the work's been done. The accounting department can confirm that the amount that was charged is correct per the contract. The department that would be preparing either an ACH check or a straight check would be able to go through this process. And so part of it was definitely just technologically the way we should be doing it, and some of it was just too much paper. So at this point, what we've done, and especially telling our vendors if they want to get paid quickly, is we've instituted the entire thing through an online type of system. On the other side, we've been using Microsoft Teams in a way that we never used it before, both to keep the company together, to have meetings where we can see each other, And also from the standpoint of even leasing, and we could talk more about that now, we could talk about more later, but we're actually using Microsoft Teams to try to talk with our tenants, to talk to our landlords, through the brokerage department, through Google Earth, in order to try to do what in some ways are virtual tours, and to see if that's going to work to help us lease space that we otherwise could not lease.
About the virtual tour thing, there's long been a question in our industry as to whether virtual tours will be a tool that is widely adopted. Have you found any traction with virtual tours?
You know, we haven't done virtual tours yet. This is the first instance where we're really going to try that. I'm not sure I know if it's going to work or not. You know, it could take you further towards getting a lease done, but I don't know if that works. I think initially, when you're sitting on a Microsoft Teams with a potential tenant, maybe a landlord as well, and you can, you know, show all the competition. You can show right down to the shopping center. You can show down to the space, and if we wish, which we have not done yet, we can show what the interior space looks like. I think we'll be all using more of that in the future. I just don't know if, at the end of the day, you're going to get a commitment from a tenant. An assigned lease without someone actually going out and visiting that space. But we're surely, you know, experimenting with all that now, and we're going to be doing more of that, and we have over the last week.
You've got, in addition to being an owner, you run a large brokerage business. How are your brokers creating value right now?
Well, you know, everything is for everyone to know what's going on. So besides the shopping center portfolio of the 60 properties and the 1,750 leases, we also do the first floor leasing under another over 100 high-rise buildings for all different types of owners as well. So part of it is talking to those owners, explaining to them what's happening right now, and making sure that if we're out there trying to lease, that we've got their acceptance of the deals we're trying to make. And we're also talking with every other broker in the market, and we're talking with every tenant that's either in our portfolio that we represent, or even many of them that have called in. So everything is just getting out there and spending your time and making sure that we're on top of it, and trying to have people understand that if we could do deals now, let's do them. And we definitely have interest from tenants to do deals. And again, as I said earlier, the question is, can we get leases signed where there is a unknown period of time when one has to perform under that lease, whether you're a landlord or whether you're a tenant? But we're trying to sign leases even with that unknown, because if we get a tenant further along into signing that lease, I think we have a better chance that that lease will not be a lease that one will kick out of, but one that actually will go to fruition.
How's leasing volume going? Are there leases are deals getting done right now?
There's not many deals getting done. No. We are doing everything we can, but we are not signing many leases right now. Hopefully we will, but if not, that's just part of getting through this crisis and being able to jump right back on top of it once we get through it. But right now, no, we're not signing many new leases.
Let's talk about your landlord business. You're, in addition to your brokerage business, and we will get back into tenant leases and retailers asking for various kinds of help. We're going to dig into that because I know it's important to many of our audience. By the way, 1,500 people here on this webinar right now. So thank you everyone for joining. But Gary, in addition to your brokerage business, you're a landlord. You have 12 million square feet and $3 billion of real estate. I believe you have every flavor of commercial real estate debt that is offered. You have non-recourse CMBS, non-recourse life insurance, non-recourse commercial bank loans, recourse commercial bank loans, construction recourse loans. You certainly know what's going on that side of things. What are you doing right now? How are you interacting with your debt? How are you interacting with your CMBS and community bank debt? What are you doing right now to operate the business? And do you have any advice for other landlords and operators out there?
Mike, you're right. We have about 60 loans. We have 60 properties. Some of them we don't actually control the decision making on them, but we oversee 60 different loans at this point. CMBS loans, non-recourse, life insurance company loans, non-recourse, actually commercial bank loans, 10-year fixed rate, non-recourse, and you're right, recourse construction loans and other loans out there as well. Let's start off by saying on the commercial bank side, we have many relationships, and we have reached out and spoken with every banking relationship we have telling them what we're doing, asking them where their flexibility is. We're sitting with banks that have lots of liquidity. And actually, on the commercial bank side, we have received calls from every commercial bank we do business with, telling us that they also would like to lend if we need money on the macro level, without looking into the details of course, what we can lend, what we can borrow, what they can lend. The life insurance companies, we have tried to reach out to each one of them, and the CMBS lenders, we reached out to some of them. But more important, let's talk about, because the question that's been coming to me quite often is, what are you doing with your monthly mortgages that you have to pay? And I have told everybody, pay the mortgage absolutely for April 1st. Pay the mortgage for, if you can, for May 1st, and pay the mortgage as long as you can pay the mortgage, because the lender is looking, and I believe there's going to be something coming out over the next 30 or 60 days, whether it's from the government, whether it's from the industry self-serving by what they're going to allow. The trade associations are all doing what they need to do to try to get some deferral on these mortgage payments. ICSC, the International Council of Shopping Centers, yesterday, Tom McGee, our president, sent out a letter to Steve Mnuchin, Secretary of the Treasury, and Jerome Powell, Chairman of the Federal Reserve, asking for rent deferrals on CMBS, specifically mentioning in the letter rent deferrals on CMBS loans, life insurance company loans, commercial bank loans. And there was another letter that went out to the president and the heads of the House and the Senate from 36 trade associations, of which ICSC was part of it, asking for more stimulus as well. So the question I say is, be patient. And the reason I say make your payments and not negotiating with a lender thinking that you should be doing it by holding up payments is something that occurred to me over 20 years ago in a partnership where I had rights, but so did two of my other partners. And they decided on a loan not to pay the loan and try to negotiate it without paying. And I spent at least 10 years after that, every time I went in to get another loan, explaining why I did not make a payment on that loan at that time during those terrible times 20 years ago. So I say to everyone, that's asked me, I said, we're making the payments in every one of the 60 loans. We're making, and the April payment is not a difficult payment to make because it's basically from rent you've received in March. And nobody has really deferred rent until April 1st, today. So my feeling is, and I've said to everyone, make your rent payments, make your mortgage payments, and let's wait to see what happens between the government and the industry. And I believe that we will get a deferral for probably 90 days. It will not be an abatement. We will end up having to pay the interest and the principal that we haven't paid, and maybe even interest on the interest that we haven't paid. And I believe it's going to be paid at the end of the term of each of our loans, and we will get through this crisis, because the lenders do not want to be in a position where the loans that would be in default if something like this doesn't occur, and I believe it will.
Two important points. One, pay your mortgage here. Today is April 1st. It's due. Gary's advice is sound advice in these times. Second, Gary mentioned a letter from ICSC President Tom McGee to Secretary Mnuchin and Fed Chair Powell. We're going to post that letter. I think we're doing it right now in the handout section to the right side. And you will see his calling on the Secretary of Treasury for a temporary forbearance of secured and unsecured debt obligations underlying the shopping center industry. So please check out that for the important work that ICSC is doing on behalf of our industry. Gary, I want to talk about your tenants. Rent's due April 1st today. How's everybody doing? 1,750 tenants. And just to throw one question out to start that conversation, did everyone pay the rent?
Well, we don't know that yet. It's April 1st. But we have had, up to this morning, 450 rent relief requests of the 1,750 tenant leases. And we have had to spend time with each of the people we manage and lease for, because everyone has a little bit of a different opinion of how they should answer these responses. And as I mentioned before, some have come as legal letters, and some have come as rent requests just by a phone call or even an email. And we have taken the position ourselves, and we have spoken to all our third-party owners, and most of them are directly aligned with us, and some of them are a little bit different than we are. And what we decided is we're not writing any agreements. We've talked with owners that said, well, I'll give a deferral of the base rent. I want them to pay the reimbursements. I want them to pay it back over the last 12 months of the lease. I want them to pay it back on the last day of the lease. I want an amendment, but an amendment is a question at times because you might have to have lender approval. So we talked about doing a letter agreement. Originally, we were going to do a letter agreement and just defer the rent. And last week, we decided we're not even doing that. And what we've done is we have said to every tenant right now, and the majority of our owners that we manage for have agreed with this. All we're doing is that we're kicking the issue down the road for 60 days. We are deferring the rent. We are not putting anyone in default. We are not we're not charging any late fees, and we are not writing any document. We're just letting it run. And that's what we should be doing. Of course, we all should be helping our tenants any way that we can. But even if we wanted to do something, which I don't, there's nothing we can do anyway. I mean, there's none of the courts that are allowing an eviction or even looking at any type of lawsuit that would relate to, rent that's due. And we are not going down that road. And none of the owners that we're talking to are going down that road. So the answer question is, how much are you trying to help your tenants? I mean, we prepared 250 banners, and we put a banner in front of every single space that has a tenant that's doing delivery or to go. We have spoken to these of the 450 rent relief requests. Every tenant has been personally spoken to and knows that we're there to help them any way we can during these times. And that's the philosophy that we've set through this company, and that's how we're answering the needs we have. And as I mentioned, if we're looking here probably by next Friday, I don't know how many tenants are just not going to pay rent. But we definitely have grocery stores and pharmacies and gas stations and some tenants that will pay. But I could say if we have 450 people that right now are not paying, or tenants that are not paying, I think we're going to have at least another 600, if not more, tenants that will just not pay. And maybe even more than that.
Gary, an expression that we've heard a lot in the news is force majeure, act of God. Are your tenants in a force majeure environment right now? Are we in a force majeure environment? How is that expression factoring into your life right now?
This is forever that talk about force majeure, an act of God. And I've never had the experience of ever having to focus on that before. And I'm not a lawyer, but I have surely listened to a lot of people in the last couple of weeks about that. Our leases state that maybe they don't have to do certain things like operate, but they do have to pay rent. But it doesn't matter because we're not forcing the collection of rent. So every time we've got a letter, and we've probably got about a dozen letters that talk about force majeure, and we have said, we don't agree with that. You still have to pay your rent, but give us a call, talk to us. And then when we talk and have that conversation with that particular tenant, we just say, look, the same thing I've said to the other tenants. Let's just kick it down the road 60 days. Let's recognize you're not going to pay rent. Let's hope where we are. And quite honestly, based on the closures in Virginia and Maryland, we're talking about till June 10th. We're surely talking 60 days doesn't sound like enough. So the question really is that we're probably going to do that another 60 days. We might even do it another 60 days. But I'm not in an opinion that I want as many tenants. Hopefully, they're not all going to come back and open stores after this, but this is not going to be over soon. When this crisis is over related to the coronavirus, it's going to take a long time for these tenants to ever open again. I want every tenant to open that has an opportunity to open. And I believe that forcing or charging late fees or doing anything that's not helpful to the tenants is not just the way I live, but it's also not a good business decision. And I'm sitting there saying the mortgages will be taken care of, just be patient, but let's take care of our tenants and make sure we recognize we're all on the same side, we're all in this together. And that's the philosophy and a line of morality that I've set my whole life as I've built this company.
Gary, I want to ask a couple questions from the audience. Is your 60-day deferral program offered to both non-credit and national credit tenants alike?
It's to everyone. As an example, I have one center where I have a grocery store that's open, but I have a movie theater that's closed. I have a health and sport facility that's closed. I have a trampoline park that's closed, and I actually have a bowling alley that's closed, all in the same shopping center. So what's the difference if it's an anchor tenant or not, in my opinion? You could, I've talked to some of the institutional partners that we've talked to, and some of them are saying, those large big tenants have their own lines of credit and they should pay the rent. They're legally required to pay it. I say that's great, but what are you going to do when they don't pay it anyway? I mean, you're either going to build a relationship up with those tenants as well during these times, or you're not, and they're not paying it anyway. So if you're not going down the process of trying to throw someone out, which is not going to happen anyway, then why are you not working with them and making sure they realize that you're one of the good landlords that work with them, whether you're a mom and pop tenant or whether you're some big anchor tenant, whoever that might be. So everybody, whether you're an anchor tenant, whether you're a national tenant, whether you're a credit tenant, if you're closed, now of course, look, if I didn't get the rent check on a grocery store that's operating, that's different. But if a tenant is closed, whether it's an anchor tenant, a national tenant, or a small mom and pop Chinese restaurant or dry cleaner, they're all the same. We are not doing anything but saying, let's just go forward and let's look forward and see what happens 60 days from now.
Have you taken advantage of the CARES Act? Anything in that that's been helpful for you as your business or for your tenants?
Yes, and if you want to talk about the biggest problem that I think we have, which we fortunately are going to be able to handle, is not the shopping centers. I believe we are going to get deferrals on the shopping center mortgages, and they will survive. The management company, we have 110 people. If we receive half the rent, we're going to get half the management fees. If we don't do any new leasing, we're not going to get any new leasing fees. And on every single shopping center, I have told every property manager and the construction department that this spring and summer, we're not doing any major capital work. We're not doing any roof replacements. We're not doing any renovations planned. We're not doing any new LED lighting in our parking lots or repair or replacement of sidewalks and underneath canopy. It means we're not going to get any development fees. So we have a management company that's going to take the biggest hit of all the issues that we have. And the question is how to balance that. And fortunately, we're able to do that. But I'm out there, working with the CARES Act because we fit under the CARES Act. But the CARES Act is going to give us something. And we received some information yesterday and this morning from some of our accounting firms and law firms. And there's actually a form that you could fill out now. And there's actually a list of what you probably need to put together as a package. And you're able to submit to the SBA department, Small Business Administration Department of any bank that has that department. And those submissions can be submitted as early as Friday morning. So we are right now putting together a list and an email that we're going to send to all our tenants that we think also fit into this, that maybe have not seen that this information has just come out last evening and this morning. And we're going to send them at least that information so they could start working on their submission and get monies as well. But we definitely fit into that ability to borrow money under the CARES Act, and we are going to fill that out today and tomorrow, and we are going to submit that to one of our banks through their SBA departments on Friday morning.
I want to talk about investor relations for a moment. Gary, you have many investors, individuals, family offices, all the way up to the institutions. How are you managing investor relations in these uncertain times? Any best practices, any things you found effective, or any challenges that you've seen with investor relations?
I've always been a believer that the more transparency, whether it's good news or bad news, people want to hear that. I've been raising money and having partners since 1984, 36 years ago. And I've learned that the more you give information out, the more people appreciate and remember that when you get through these times, especially these bad times. So again, sometimes I tell people here in the company that only 1/3 of our job, or maybe half of our job, is to do our job, and the other half is to make sure that people that we work for or people that are our partners know what we're doing. So we have sent out many, many emails, personal emails, to all of our investors, telling them about the banners we've put up, showing them pictures of some of the banners that we've put in front of the stores in some of our shopping centers. We've told them that we are not going to actually make distributions. Our investors normally receive distributions quarterly at the end of each quarter. So the quarter ended March 31st. That means sometime in the month of April, our investors would be getting a check, an ACH check, into each of their bank accounts. And I have spoken to probably several dozen of my investors that have called in asking what's happening. And of course, I'm talking about where I have multiple investors, not the institutional partners, which is an entire different conversation. But with all the many, many partners that we have on these different shopping centers, I have told the ones I've spoken to, and we're going to be sending out a letter sometime in the next week, and we're going to be telling them that we are not making any distributions. Cash is king. Liquidity is what's important. Assets are really unimportant if they're liquid right now, and we are going to do that. And every investor I've talked to said, absolutely understand. If we don't need the cash in some of these partnerships, then we'll obviously catch up with a distribution sometime in the future. Fortunately, in all our partnerships, and everyone, it's nice to look back with hindsight, but every one of our partnerships, my entire career, we have always kept 2 months of mortgage payments and 2 months of operating expenses in our partnerships. So in effect, I'm not worried about making payments for April, May, and probably even June, because we will be receiving some incomes, because most of our shopping centers are grocery and pharmacy anchored.
Do you have any investors trying to liquidate their positions? Anybody getting skittish, and how do you approach that?
A week ago, I'd say I haven't got any calls yet, but I actually have. I've received maybe 3 or 4 calls from people that have wanted to say if they wanted to liquidate their interests, could they? And I've actually got 3 or 4 calls from investors that have said, do you think there's anything up that's an opportunity for us that's going to be coming up in these times? My investors are all accredited investors, so they all, or many of them, probably have liquidity available, but obviously not all of them. The reputation here that I've had since I started in this business, the partnerships do not allow these investors to decide when we sell a property. And since we don't sell, the investors, when they first invest, always ask, well, how do I get out if you never sell? And it's only on reputation. In my entire career, I've always said to everybody, if you ever want to sell for any reason, whether it's a personal reason, a business reason, a cash liquidity, a estate planning issue, it doesn't matter. You come, valuation of property now is a little bit more questionable, but if you're going to do it fairly, you never discount a value of an interest based on being an illiquid interest. All you have is your reputation. You hopefully set a fair price. And if that's the case, I feel comfortable that I told any of these investors that I could sell their interest within 30 days. I would go to the other investors on that particular project. I'd go to all the investors that I have in any of my other deals, or I would go to just a list of people that are on my list that have not yet invested with me. And at least at this point, hopefully it won't change. If all those opportunities or choices did not occur, I would probably buy the interest from the investor in order to keep the reputation during these times, so that other investors know in the future that in the worst of times, they were able to sell their unit if they needed to.
Gary, I'm getting some text from my team. I think you could probably do a little fundraising in our chat section right now of this webinar. You mentioned cash is king. Are you looking at new deals right now? I mean, clearly values are down, and the expression blood in the streets is the time to invest. Or when do you think the time will be to look at new deals? And is Rappaport looking at new deals right now?
Let me answer 2 parts to that. The first part you mentioned about cash. And I can tell you that we have looked at every single partnership, and we have looked at anywhere that the partnership could borrow. Remember, we're not a real estate investment trust. Every one of the 60 properties are in 60 separate LLCs. We can't take cash from one partnership and move it, of course, to another partnership to be able to make costs, pay operational costs, and also potentially mortgage payments. But we have looked at every single shopping center for ourselves and others, and we are trying to make sure we understand, and after April rent, we'll understand more, is how much cash we actually have in each partnership, and does any partnership have an opportunity to borrow cash if it needs to borrow cash? But more importantly, again, at least from the standpoint of 110 employees that are here, and yesterday we had a conference call where I was sitting here at this same chair, in the same chair, with 110 employees. And I gave them an update of everything that was happening, and I ended up making sure that everyone understood that we're here, nobody's losing their job, and we're going to protect the real estate, and we're going to protect you and your family during these difficult times. But I'm looking at every single opportunity to borrow cash, even though I don't need it now, because I don't know how long this is going to last. And I've gone through enough bad times that I have seen people that thought they had enough cash to get through a certain period of time, and the recession or the bad times were worse. And so I'm looking there and saying, how many dollars can I borrow? Even if I don't need it till 2021, I'm going out there and making sure that I'm liquid. Now, from the standpoint of opportunities, that could be for that cash as well. But right now, there's nothing out there for sale. Everything basically is on a hold. There's no debt. I mean, we generally borrow either 2/3 or 75% debt loan to value, and no one's out there lending those kind of loan to value dollar amounts, and nobody, whether they're not lending in the hotel business, they're surely not also lending in the retail business. So I don't see anything out there, and I'm not smart enough to underwrite an opportunity to purchase at this point. But I think in the fall, or not the summer, I think by the fall or even the end of the year, surely there's going to be opportunities out there, and there's going to be some debt. And if the price is right, maybe the debt's only 50%. Maybe the debt's with a commercial lender that has more liquidity, and maybe it's with a personal guarantee that I'm willing to put on a loan in order to buy something with very high returns. But I don't think I'm going to have any institutional partners stepping up. But I do think of the many individual partners that I have that are accredited. I think they will be there to buy with me, and I think we'll be an opportunity buyer at some point. But I think it's probably going to be closer to the end of the year than any time over the next couple of months.
Gary, I want to take a couple questions from our audience. Any predictions about the effect coronavirus will have on retail cap rates, short and long term?
Well, surely cap rates are going up and prices are going to go down. I mean, if anybody's out there selling right now, you have to assume they're somewhat distressed, and especially when you have when there's more buyers, the cap rates are down. Buyers like us, we're generally 75% debt buyers. There's no 75% debt out there. So if there's any buyers out there, there's less. And the institutions, they're not out there buying retail. They weren't out there buying retail before the coronavirus very much. So surely this is a very difficult time. And surely there's, people say you make more money sometimes in bad times than good times when you have the liquidity and the cash to do so. And that's definitely going to happen. I think this, in my career, I've been in real estate since 1973. And I can tell you that in all the bad times that I thought never could get any worse, this one actually scares me the most, because it's not ending anytime soon, quote, after the coronavirus ends and the crisis ends. It's going to take a long time for retail to come back, for these retailers and these restaurants and these mom and pops to be able to open new stores, to even open their existing store. And we're going to have to be leasing a lot of spaces of tenants that will never open again. So I'm not saying anything, and I've said to anyone that's talked to me, plan for this to be a long-term problem, maybe the next couple of years before it gets stabilized again. Plan to obtain whatever cash and liquidity you can, and whether you use that to sustain what you have, or you use that to buy something on an opportunity basis at a great return in the future, that's what we're planning for.
I want to kind of focus on a couple personal questions I have for you, but to that point, I wanted to focus, how you're borrowing money right now and how you're negotiating lease and tenant relations. But let me expand on that question and the answer you just gave. What do you make of all this? Like, where's the real estate industry going to go? Are there going to be like very deep and long lasting changes? And are you thinking about your business differently long term now?
No. I mean, look, I'm an optimist. I can't be in the business I'm in if I'm not an optimist. So the question is not, is it going to get better? Of course it's going to get better. I don't know when it's going to get better, and I don't know if it's ever going to be like what it was before. I mean, I assume that many people that are shopping more online than they ever shopped before will continue to shop more online. And maybe buying habits will change, and maybe we will not need as much retail. But we surely need bricks and mortar. And we surely are going to get stable at some point. The only question is what time. And if I've learned anything over my career, is to be able to live through these times, and whatever amount of time you think it's going to be before times get back, it's going to be longer. So my feeling is just try to get as liquid as you can, get through it. It will get stabilized again at some point. We will get past this, just like we got past 2008, 2009. And I'm not changing my model. I mean, my model is buying basically grocery anchored shopping centers in the Washington metropolitan area in one market where I know all the different tenants, and I know the political people that are in each different county and town that I work in. We have fabulous relationships, and giving monies back to all the communities that we work in. And my model is exactly the same. I'm not changing. I'm just making sure that every way I can that I'm going to get through this crisis, and so all the employees that work for me as well.
Gary, you famously balance 33% of your life on family, 33% on business, and 33% on giving back. How do those principles guide you now during these stressful and uncertain times?
Well, anyone that's listened to me speak, anyone that's listened to me teach, I talk a lot about a third. I talk about third being family first. And that's what's most important for me. That's what's most important that everybody should be focusing on, especially these times when you talk about safety, you talk about health, taking care of your family. Of course, that's number one. In the past, when I talk about that second third, it's related to one's business because we spend so much of our lives in our business. And the third third is really in the past where I do the teaching and the writing that allows me to, what I like to say is I can help someone else reach their dreams sooner than they could reach them, then I've done something special with my life. And people that know me know that I will talk to anybody that wants opinions or thoughts. I mentor anybody that wishes to come to me. And that third has always been before this crisis. But when we sit in this crisis, I always put the business and that third together. And really what I now talk about is morality, is, going home at night and having a line of morality that one knows one can look back at one's life during these times, and one has done both for your tenants, your vendors, your partners, anyone you work with, people in the community, the things that you believe in, and I believe in. And that's what I have been talking through with my company since I started this company in a shared office space with a part-time assistant in 1984. These are the times when people at times say to me, Gary, I know you're a good businessman. And I say, I don't want to be first known as a good businessman. I don't want someone in the company to be first known as a good businesswoman. I want to be known as a good man, and I want that woman to be known as a good woman. I said, first morality in one's life, and our president, Henry Fonville, sent me a quote a couple of weeks ago from Winston Churchill. I can't exactly quote it. It basically says, anybody can be a good person in good times. It's when there's blood in the streets that you really can step up and be a person of honor. And these are the times when you look back on your life and say, I could have done something this way or that way. I'm doing it the right way. I'm going to sleep at night believing that I'm living with a line of morality that I've always wanted to live with. And that's what my father taught me. That's what I teach my children. And that's what everybody should get out of this webinar, if anything, is that we and our tenants and everybody we work with, we're in this together, and we're gonna get through it. We're gonna survive, and we're gonna go forward.
Well, Gary, you're a very busy guy, and you've been generous with your time today. So thank you. For everyone who sent in questions for Gary that I wasn't able to get to, we had a number of people asking about Gary's thoughts about the state of Virginia, for instance, or the federal government's responses, or any number of other, nichier tactics, for instance, for securing debt in these times. We'll try to do something in editorial with that. Maybe I can do some Q&A with Gary via email or something like that. But please, we have so much to be grateful for here. Sometimes it's hard to keep that top of mind, but with the unemployment rates the way they are, I'm sure that there's folks on this webinar here who have been affected personally or through their families by the virus or by the effects of the virus. Please know that you're in our hearts. We're going to get through this together. And tune in next week to our next town hall. We'll continue to profile the men and women who are leading our industry during these uncertain times. Thank you to our sponsors. Thank you to United Bank, Nexus. Thank you to Tech24 Construction and Co-op. And Gary, a very warm thank you to you personally and to your team. And keep doing what you're doing out there. Please, thank you again, and be very safe during these times. Thank you, everyone.